VJ, we have some important topics to discuss after the news of our $5 billion write down with SAIC in China, as you're aware. I'm surprised we let it get to that point, and we need to assess how we can pivot to ensure that we learn from our experience in China. Many analysts are recommending that we pull out of China, and unfortunately, that might be the case, but I don't feel we should leave with nothing. The EV and alternative energy market is booming in China and in other key market areas, but it's still not growing as much as we hope back home. Our competitors, BYD and Xiaomi, have taken our market share and many of our competitors as well. And this has resulted in a major shift in our competitors' strategies. Take, for example, Honda and Nissan have been in talks to form a partnership, and one of our main competitors that's a partner with our joint venture, China Volkswagen, has shared the same fate that we have in the Chinese market. And this will also impact our joint venture partners and create a big issue. We know that we have remained protected in our home market of North America, with key markets being Canada and the US, and we need to ensure that we protect our market share here. Consumers have been slow to adopt EVs in our native market, and much of this is due to concerns such as low range or range anxiety, overall price, and resale values. Much of this is due to the fact that our manufacturing and production costs lead to an EV vehicle that is being marketed at a premium price over our ICE vehicles and is not providing the performance that our customers demand. It's a tough fate, but with the way that China is going, I feel we really need to focus on innovation and market conditions that fueled our competitors to overtake our market share in China. There's still a strong opportunity to gain market share in a native country, and it presents an opportunity that we cannot overlook. The USA and Canadian government have imposed 100% tariffs on Chinese vehicles, and even with these tariffs, we still have a hard time competing with the prices of our competitors. Although BYD and Xiaomi are not in North America, they've already been delivering vehicles in Europe and Australia, and these are markets that we could have penetrated shall we have had the right strategy. This is an urgent issue and top of priority as we have been given the opportunity to protect our native market with tariffs, but the time that we have is limited and needs to be utilized efficiently. Our joint venture with SAIC can continue to provide us with the right market intel into how consumers perceive the innovations of electric vehicles in China. We've delivered 370,989 units as of November in China in 2024, and this is a significant decrease. Our focus needs to be on creating an EV that is cost effective and meets the needs of our market in North America. As of right now, we have strong technologies, but we can't meet the cost leadership strategy we need to have. SAIC could provide us with inputs as to how Xiaomi and BYD manufacture vehicles with lower labor costs, but 50% of our sales take place in North America, and since we had approximately 40% of our sales occurring in China, we need to find new markets to ensure that we keep our market share in our native country. There's 5 things we need to focus on and pivot to ensure that we maintain our competitive positioning in North America, and these are: utilize our JV with SAIC to learn as much as we can regarding the Chinese EV market and use these takeaways to impact the growth and market share of other core markets such as North America and the surrounding Asian countries. 2, focus on investor capital on core innovation and technologies to drive new features such as autonomous driving with other artificial intelligence in vehicles. 3, develop a cost leadership strategy to manufacture an EV so that our product can become the vehicle of today and not the vehicle of tomorrow. Continue to utilize our markets to gain knowledge as to understanding our consumer preferences and needs in each market. Focus on after-sales activities of EVs, as this market switch from traditional ICE vehicles will impact the way the automotive industry moves forward. I'll be sending out a memo to add some more details and to summarize the key points of this video, but we need to act now. And I think we need to meet as soon as possible to formulate our strategy and develop timelines in 2025 to ensure we're meeting our targets. We're 116 years into the business and we've adapted before, so we must continue to show our strengths and provide our customers what they're looking for before it's too late.